Okay, hi everyone, this is Katie here. Welcome back. So this video is about the trades being placed between October 13 to October 17. So it's one of those textbook whale weeks. I had assignments, rotations, hedges, and some beautiful theta harvest here. For the past 7 days, I got about plus 4.19% here. Okay, let's take a look at our positions here. I would say overall. Let's take a look. Throughout the weekend, we got quite a number of assignment and also some expiration for the calls being sold here, and also puts that were being sold and also bought here. So all in all, I would say that Google, GOOGL, got assigned at 215. And a summary of my portfolio here is that CRM got rode smoothly into November from October. And then NBIS also added some liquidity because I decreased from NBIS 115 put to 105 put here. And also Pfizer PFE here. So PFE Pfizer here I sold calls after dividend exercise date, which is November 7th. So I sold 14 with the intention of holding Pfizer throughout the dividend exercise date to get the dividend. And I sold more Pfizer puts yesterday before market close so that if it doesn't get expired out of the money, I will still get Pfizer puts and then I will still get dividend for that. Okay, let me walk you through exactly what happened, why I took each trade, and how this all fits into my uh, income plan here. Okay, so let's start with Google. As you can see, Google is already out of my spreadsheet here. And also ETHA is also out of my portfolio, I would say. And for KTOS, soap puts are also out of it, although I have some KTOS stocks here, and I'm now doing a covered call here to get out of KTOS here. Okay, let's see. For Google here, okay, just to talk about Google, I was running a covered call at 215 and sold puts at 240, which expired out of the money. And Google got assigned 215 and it got caught away here. So Google away here. Okay. That's okay. It's part of the real strategy because assignment isn't a loss, it's actually a reset. The premium I collected from both sides already paid for weeks of the Theta decay. And now that the shares are gone, I'm back to 100% cash on this ticker. So 215 was my break-even price here. So I bought Google when it was 215 and I sold it at 215. So along the way, I collected premiums by selling puts and also selling calls here. The plan probably next week I will sell more puts around 240, ideally with a 1 week expiration date here. So that's how I'm going to reset the wheel strategy. But I'm still monitoring and let's see whether I want to get into Google here. Okay. Next, I want to talk about is about CRM here. So CRM here, it's my steady income generator because actually I was doing a strangle. Strangle, it's sold puts at one specific strike price and sold calls at one specific strike price. So previously, I was in October, I was selling 235 puts and I was also selling 270 calls. Going into November, I actually boosted up to selling 240 puts and also selling 260 calls here. In this, I got extra new premium. So I uh, actually maintain a very nice even skew between the puts and calls. Um, Volatility stayed elevated after earnings. Actually, this week it has an earning release. It actually went up to more than 250 plus, and then it drops back down to 240 plus. So still within the zone here, which is 240 and 260. So my deltas are balanced and theta's grinding daily. So this CRM remains one of my favorite tickers for the wheel consistency smooth charts. And I chose CRM because it's also for diversification, as my portfolio is more into other different sectors. So this was one of the reasons why I chose to do the wheel strategy on CRM, or rather a wheel strategy plus strangle strategy here. Next, I want to talk about NBIS here. So let's see. NBIS was about boosting excess liquidity this week. So I closed out my 115 puts and we sold the 105 puts for November 21st. So this shift actually dropped the delta risk, but still it brought in fresh premiums for that. This net credit premium for doing so. Why I do this move? Because I wanted to keep my excess liquidity high, so while still earning a yield here. So rolling down and up keeps the capital productive, but reduces assignment risk if the stock keeps sliding. So while it looks like a defensive move, it's actually a strategic liquidity play here. Yeah. So that's the intention of doing the trades for NBIS here. So next, one Silver mention is GLD here. So GLD here, I still have GLD sold puts at 370. In this week, actually GLD went up above to 390-ish here. So GLD still continue to do what it does best, is slow and stable theta decay. And I think it's a safe haven for a lot of investors going into GLD due to the uncertainty in the market here. So I think we're expecting a rate cut soon, and GLD would definitely be in an advantage position when the rate cut, and it will even go up higher. Now it's also all-time high. So I can see that GLD, that's why you see my strike price is being stacked from 360 to 370 here. So along the way, I cycled between the different puts also. I also bought puts to hedge or to boost my accessibility here. So it's like a spread for GLD here. So I cycled between October 24, 360 puts, and also October 31st, 325 puts, October 24, 325 puts, and also October 31st, 370 puts. Uh, and then I closed some of my positions. So it's still net credit for doing so. So and it compounds nicely. So this GLD is my theta sync. So when volatility spikes, I will write puts, and when volatility drops, I re-enter tighter. It's not exciting, but it's what keeps the portfolio balance when the equities starts swinging. Next, back to Pfizer here. So just now I also mentioned Pfizer. So currently is lining up for dividend play. The exercise date is November 7th here. So I actually sold uh October 31st $24 puts here. And then right before the November 7th exercise dividend date here. So the hypothesis is very simple because uh during dividend exercise dates that are approaching, many dividend hunters will enter, so the stock will stabilize. So I have two scenarios. One scenario is that I won't get a sign as the stock would climb up higher because more investors are going into Pfizer here, and then my Pfizer spot price will be higher than my strike price of 24. So currently it's not 24.5. So it might not get even a sign. And the other scenario is that if Pfizer spot price tank, then I would just get assigned Pfizer stocks, which is also beneficial for me because I will have Pfizer stocks that I will line up for collecting dividend on the dividend exercise date, and I will sell calls after dividend exercise dates, like my November 14, 26 calls. So all in all, two scenarios, I still get uh, net credit for doing so. So it's a very boring, stable trade, but it adds steady income to the wheel stack here. So next, as I mentioned, I got out of ETHA and also KTOS puts here. So and one mention is VIX here. VIX, I also closed my VIX in October and put in more for December. So as expected, market volatility actually increases. So my VIX is actually uh, got a boost for this. Uh, so I would say that's all for today. Let's see trades. because if you want to look at the daily trades, the intention, all the trades that has been performed here, it's all in my daily video. So just go to my daily video and take a look at what was being done here. But just to reiterate, the principles is that if my value left is less than 50%, I would just do a roll or change my position. Yeah. Okay. So I think my portfolio here still just a wrap up for next week. So macro wise, volatility compressed right into options expiration, exactly what I wanted. So the SPX here, let's take a look. SPX. I think SPY. Let's see SPY here. Okay. So SPX is about 6,662 here. So unless we see a major volatility shock, I will continue the short put wheel here strategy here. So my focus next week, probably I will consider maybe I'll get into Google again. But I will just maintain my CRM positions and hold my MBIS positions here. So let's take a look. CRM positions here. Hopefully CRM will be just in between the zone. And then for MBIS, just holding it. And then I'll monitor GLD to see if there's any price to enter again. And also I'll add more VIX hedge if VIX drops below 15 here. So I think that's the plan for next week. And also some notable mentions is for JD. Bought some lottery picks here for JD. Bought some calls because I'm expecting it will be a bullish price action for JD here, especially when it's earnings in November. And I also bought some lottery for POET also, Jan 15, 2027 calls here because I think POET in the long run it will climb up higher. And also somehow also bought some lottery calls for somehow here. So also thinking that somehow is bullish. So they are just a lottery, and we'll see what will happen as time passes by. So I think that's my recap for the week. So just to mention. GOGL Google got assigned, CRM rode smoothly, NBIS boosted liquidity, and GLD and Pfizer quietly earned. So as usual, my options expire out of the money, and some got assigned. So it's part of the real strategy plan. So if you enjoyed this, remember to like this YouTube video and also drop your thoughts in the comment and subscribe if you want to follow my strategy in real time. So I think that's all. So have a great day, everyone. Signing off here.